is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great week, too, folks. Love coming out of you makes you happy. The whole world can love you, but that's not the love that'll make you happy. What will make you happy is to share all the love you have inside of you. That is the love that'll make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials down 58, NASDAQ off 41, S&P's down 4.5, gold contract down $2.50, trading at $12.6890 an ounce. Silver down 26 cents, $16.96 an ounce. Platinum up $4.40 at $9.44 an ounce. Copper, let's see where she is. Copper's down 3.5 pennies, $2.61 a pound. Light sweet crude up 24 cents, trading $46.07 a barrel. Notes, 10-year note down 3 ticks, 126.18. 30-year bond down 8 ticks, 155.09. Both notes and bonds, folks, are confirmed ABC structures on the way up. You're backing down, light volume. They've already rejected lower price out here today. They want higher price, lower yield. King dollar down 118 ticks, 97.121. Now, King dollar's having a hard time holding and getting through May 18th. King dollar has been having a hard time for 6 months. Bottom line, the last time we were down with some good volume was on that May 18th. That number to keep your eye on there is 97.275. Gets up to it, gives it up, comes back down again. That's building cause for lower price. The euro is trading at 112 to the U.S. dollar. The yen is at 109.78 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a sideways market inside the S&Ps here. You get big volume. Friday, bottom line, come off the highs, monster volume. You did 132 million shares. You got to a low of 241.95. Today, we've already done 60 million. Bottom line, it's building some cause to trying to get down and retest at least that low from Friday. That's in your S&P. We go take a look at the Dow Industrials, same type of setup inside the Dow. Dow is down 57 bucks. That low there is 21,159. Right now, you're at 21,213. The NASDAQ Composite NDX 100, that's where the real heat is, and is still. The composite today got down to 61.10. We're at 61.68 right now. Now, what is going after, folks, it's going after the 59.96. That was the low that was established out here on the 18th of May. We had come down on the 17th, made a lower low on the 18th, then a rejected lower price, and then bang, just took off like a little rocket ship from 5,900 all the way up to the 6,300, gave it up in spades. It's building cause to get down into that area there. And you're building cause, and the volume, they're still unloading on this market in a big way. On the NASDAQ, folks, we did $3.1 billion on Friday. We've already done $2 billion today. So bottom line is that, percentage-wise, the market's not that bad. The NASDAQ is down 0.6%. S&Ps are down 0.2. Dow's down 0.2. But that 0.6, they're unloading. Yes, people are buying the dips. Doesn't look like they are right now, but they're buying the dips. Someone's on the other side of that. And, we'll see whether they get taken to the cleaners or not. My take is that they are going to get taken to the cleaners, but we'll see where a bounce is going to come in this market. If we go and look at the NDX 100, the 3 Qs, what you're going to see with the 3 Qs, bottom line, Friday, we did 109 million shares. Guess what? You're at 90 million shares right now. You're at 96 cents lower. This thing, I don't expect to even stop until it gets to 135. 135.87 was the low of the 18th. It's going to go after it. And, we'll see whether it blows it away. The small caps, we take a look at the small caps out here. IWM, that's hanging tough at the highs. We're down 36 cents, 141.23. It's in the lower range. As soon as it got back inside 141.81, it's the lower range. We'll see if it digs into the lower range. As of right now, it hasn't dug into that lower range. Gold contract. What do we have with the gold contract? Gold contract traded down to 1265. We're at 1268. You've done 163,000 contracts, and you've rejected a lower price. I mean, we did come into the strength from the 2nd of June. That's where the low was 1261. The high was 1282. We did 272,000 contracts. The low of Friday was 1266.70. We got underneath it, and this is what we needed. We got underneath it with a lot lighter volume. That's how this is shaking out. So I suspect that's going to build some cause to try to get up into and over the $1,330, which is the April 17th swing high. Last week, we did get up to 1298.80. Silver contract. Let's go take a look at see we get the silver out here. Silver is trading at a price point of $17.03. We've done 24,000 contracts. Now, this is under its breakout area. Now, this is the confirmed ABC structure in the way up. It got under its breakout area. And this thing has to close inside of the 1720 area. So this thing's got big work to do. Let me go look at the SLV for a second, because when you're rolling contracts also in this market. And so it's good to go look at the iShares and the contract itself. So the contract itself, meaning the iShares, got down to $16 today. You're going into 11.6 million, you're done 5. So bottom line, that does need a rejection of lower price. It has lighter volume. Bonds. Okay, so notes, bonds. We have the Fed meeting this week. Bottom line, they want higher price. This broke topside on the 2nd, has the volume behind the move. You get 2 separate ABC structures on the way up in the 10-year and the 30-year. This pullback with lighter volume today, rejected lower price, and go over the good old King Dollar, because King Dollar still can't catch a bid. It's pretty wild, too, because, King Dollar had a shot to get to higher price. What you had with King Dollar is that it finally had got off the bottom on Thursday. Volume wasn't bad. Friday gave it up. Guess what? Today, you're right back underneath that 18th of May area, which is 97.275. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow's down 54. Nasdaq's up 42. S&P's are down 4.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 51. You get the Nasdaq off 41. S&Ps are down 3.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve's got a great show right here at TFNN every trading day, 1 to 2 Eastern Standard Time. Now, the way you can get all the programming at TFNN right on your cell phone, right in your browser, put TFNN.com. On the right-hand side, hit Tiger TV. You're going to get some great HD quality video as well as audio. And as you're over at TFNN, you can test drive Steve's newsletter. It's called Mastering Probability. The way you do that, you go to TFNN, go to newsletters, hit Mastering Probability. You can test drive Mastering Probability 30 days absolutely free. Steve Rhodes, what's going on?
Well, just waiting for this America's Cup race to begin. Have you been watching the races?
You know, man, I haven't. I saw you guys in the Bermuda thing. Oh, man, I got to do that as soon as I get off.
Yeah, well, this could be the last race. They were racing. They have been starting all the races at 1:00 in the afternoon.
Okay.
So right when my show comes on. So instead of having Bloomberg or
shame on me.
CNBC,
Oh, that's terrible. That stinks.
But I tape it. anyways. But I have it in the background anyways. Today, I haven't seen this for a while. They started the race, and then after about, I think, leg 2 or 3, I'm not sure, the wind just simply vanished.
Oh, yeah.
No wind. And those boats don't move unless there's some wind. So they had to abandon that race. And it looks like they're going to start it maybe in about 10 minutes or so. Okay. But we ought to do the shows from Bermuda.
Yeah, I can get my head wrapped around that.
Yeah. These races are amazing. You know, every year the technology that goes into these boats, it's really almost hard to call it sailing.
Yeah. I've seen them. I've sailed right beside them, you know. I sailed on the last one when they were in Newport, right? They before the actual Cup.
Yeah,
I was sailing a boat right beside them, and it was awesome because what had happened, folks, is that they were there for 2 weeks sailing, and it was raining, and no one went out. And I said, "Come on, we're going out, man!" And it was awesome, man. It was amazing watching them because they are like just.
Today I think
fly.
Maybe it was yesterday. They'd gotten up to about a speed of around 45, 50 miles an hour.
Yeah.
I mean, they were at 40 plus knots, which is just hauling.
One mistake and they go boom right down. Yeah,
absolutely.
I saw one capsize in Newport Harbor.
It was. Yeah. Can you imagine how much money is in
heavy?
And all the technology that's in there these days too.
Totally.
Yeah, amazing. Well, look, I thought what I would do is just give my take on the markets, especially after Friday's move, and just give listeners, give yourself a view of what I'm looking at. Sometimes we can take a look at the same thing and see a little bit different. So my take at this stage here is the market is forming another bottom. And one of the reasons, Tom, that I believe that is, in fact, because of this large volume that we've had inside of the QQQ series ETF, both on Friday as well as today. And this first chart on my screen shows other high volume days and then the bottoms that are associated with. In fact, the volume that we had on Friday was the largest single day volume that we've had since August of 2015, which formed a heck of a nice bottom. And normally you have some larger moves to the downside, or more than just maybe one day, or in this case here, it'd be really 2 day, because we have seen lower prices inside of the QQQ series. So what I have seen is that the Qs give us a nice signal when there's big volume. It's I can't tell you the reasons why. I just know if I go back and take a look at the chart for many years out here, and I don't know if it has to do with all of the buying, the buybacks that are out there, but these high volume days, and sometimes it's right to the day. Most times it's right to the day. Oftentimes it's within a couple of days out there. And what's also interesting is this chart here, Tom, goes back and takes a look at the weekly volume. I should have really increased the size of it at the bottom of this chart here. But it shows, going back into the 2009 bottom out here, that even on a weekly basis, these large volume moves end up identifying a bottom. So I'm taking a look at the bullish side of this case and saying, okay, now we haven't had much of a movement in the Dow or the Russell 2000 or the S&P, but the Q has certainly been leading things to the upside. So the question is, are the Qs or the NDX 100 also signaling a bottom and then getting ready to continue to move north? And when I take a look at this weekly chart here for the NDX 100, this has our horizontal trading range levels. So when price was pulling back this morning, it actually pulled right back to where one would anticipate that it would find support. Not right to the dollar, right to the tick, but the 56.23 level happens to be a horizontal trading range. Now, granted, it's a weekly chart, and so we really won't know until the end of the week. I mean, if 56.23 fails, then that opens up the door to the big gap from back in the April time period, or maybe even the 53.03. But what I know about the NDX 100 thus far is we've got the high volume set up and we have price moving right back to a horizontal trading range. That's on a weekly basis. If I look at the daily chart out here and we just take a look at some trend lines, the one that takes us back into July of last year, nowhere near that trend line, but the one that takes us into December of this year, really just shortly after the election, is right where price had pulled back. Another snapshot of this chart was taken about an hour ago, but nothing has really changed significantly, certainly not to the downside inside of the NDX 100. So this says to me that price inside the NDX 100 is also testing support. If I take a look at the advanced decline oscillator reading, that's the very bottom panel of my screen. That takes a look at the daily advanced decline data and then goes ahead and calculates what the difference between the 39 and the 19-day exponential moving average of that data. That's how the calculation is created. What's really important for viewers or listeners to understand is when that is above zero, and the reading, again, a half an hour ago was about 1181. When it's above zero, it tells us that it's actually buyers in control of the market, even with Friday's big, huge move to the downside out there. Now, again, it's looking at a 39 and 19-day difference. So one day's information may not totally drive it down. Well, in this case here, it certainly did not drive it down below zero, but the reading is still that it is buyers that are in control. Now, earlier in the day, it looked like the spot volatility index was going to close with a reading greater than a rate of change greater than 10%. As of right now, we don't have that. But if we were, this chart here shows that this is when the market, now it's typically the S&P 500 that I show, and that's what I'm actually showing here, is when it identifies a bottom. So we don't have that there. That doesn't mean that what I've talked about in the volume and the Qs isn't in play, but it would be one more piece of the pie. What I'm also watching is the market breadth that the TAS market profiles create. And I'm looking for the 60-minute time frame. That's what we have up here, and really the upper panel. I'm looking for this green line to go ahead and cross over the red, to get a bullish crossover. As I speak right now and take a look at it, we're close. We're no cigar. We have 31 stocks that are above the zero line and 39 stocks below. So we don't really have a confirmation yet from this. This would be a nice confirmation that a bottom has formed. Without it, it's just looking for a bottom. And if I take a look at the now all of that, what that does is that really sets out what you and I talked about last week, which I still anticipate that what the NDX 100 is doing is moving up into the 8,500 level, and that is the break of this consolidation. So, folks, that's my take on what the markets are doing out there.
And, folks, you can come over to our website at TFNN. You go to newsletters. You're going to go to Market Insight. You're going to go to Mastering Probability. You can test drive that 30 days absolutely free. And, of course, don't forget, every trading day, 1 o'clock right here. Steve has a great show. Steve, thanks so much. Look forward to the show tomorrow.
Tom. Take care. Bye-bye now.
Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 74. You get the NASDAQ off 52. S&Ps are off 6.5. And if we take a look inside the indices and see where the strength versus the weakness, this is what you have out here right now. You got the leader on the way up, putting positive points into the Dow, even though it's negative as Chevron. Chevron's putting 9 positive points. Disney's putting 8. GE's putting 6. Taken away from it, Apple's bringing 32 negative points. United Health, 20. Big Mac 19, Visa 8. Inside the NDX 100, what we have is this. Excuse me, folks. You have Citrix is up 2.8%. You got Acme up 2.5%. Charter Communications up 1.6%. Taken away from it, Netflix is down 4.6%. You get IDEX Pharmaceutical off a 3.8%. Skyworks, that's an Apple supplier, that's down a 3.4%, and Apple's down 3.2%. We go take a look at some of these volumes. You're going to see that the volume, and YSC is really not that heavy. You're at 629. That'll do about 850. That being said, guess what? They can't get out of the NASDAQ fast enough. We're going to do another, probably about 2.6 billion in the NASDAQ. We've already done 2.1. So bottom line is that the door is just not open big enough, folks, and bottom line is that they're selling. Let's go to Vic in Texas. Hey, Victor, what's going on?
Hey, how you doing, Tom?
I'm doing great, man. Yourself?
I'm good, thank you. Say, I had just a question regarding something that you had covered last week regarding the banks, and I don't have a very high opinion of them either, but, you know, there have been at least one, if not more than one, bills passed in the last couple of years that allow banks to take your money. And then the bill was passed, and it said that the United States government will no longer do a bailout of the banks, but if the banks need money, they can take yours. They can do a bail-in just like they did in Greece and everywhere else. Take your money and exchange it for bank stocks. And I'm surprised that the general public isn't absolutely livid and furious and screaming bloody murder about this.
Well, I guess, do you know what the bill number is? I'll look it up. I haven't heard that.
Google it. No, I Googled it over the weekend. It was passed in 2011. I read about it in 2015.
Wow.
So, yeah, it's insanity what the banks have allowed to pass in the dark of night.
Well,
And,
I'll be happy to look that up. I'm going to look it up. I'll look it up tonight, and we'll report back to you, man.
Okay.
Okay. Have a great one, man.
Right.
Have a safe
Thanks.
one. Let's look at some of the higher volume stocks out here, folks. Today, this week you have GE getting a new CEO. That's up, let's see, so, yeah, it's up $1. No big deal there. GE's been a dog for so long, it's pretty amazing, actually. GE actually is in a large ABC structure on the way down, and it broke with volume, so I think that thing's going to go a lot lower. Take a look at some of these other equities out here. We have Advanced Micro down 24 cents. Apple's the big one. It's one of the big ones. That's down 4.70. You got Microsoft off 71 cents. J.C. Penney, that's flat. You got Regions Financial, that's down 75 cents. We go into some of the monster NDX stocks. We'll take a look at the king of the hill, Amazon. Amazon is down $16. Volume behind the move again. So Amazon came down to 927 on Friday. Had volume of 7.6 million. We've done 8 million today. Bottom line, that thing's going to get tested. That low out there of 927. We got to 945 today. Google. Google is trading 957. Same deal. Monster volume, and they're slamming this thing. Now, Google, has a wide open gap right underneath it at 887. So Google, the top of that gap first is what's saving it right now, which is 935. If you want to see how, a high volume uptake can save you when you're going downtown, Google has it. When it had reported its earnings, it got up to 935. The day before that, it was at 887. It had volume of 3.8 million. Well, we came down today with 3.6 million. You did the first sledgehammer right into that. Bottom line, it'll take more force, though, to break that down. I expect you're going to get it broken down because of the volume characteristic out here today, and then that gap will get filled up. Facebook, we take a look at Facebook out here. Facebook also has the volume behind the move. We did 35 million Friday, did 30 million today. This is pretty cool now. So this has already got into the May 17th and May 18th area. Now, the low of the 17th was $144.42. We got to $144.56 today, and you have more volume as you're going there. So now this bottom is going to get tested again. This is where this gets really wild, because you can look in one aspect of what Facebook has just done here, and you can say, okay, listen, you know, that came down there, it rejected it. Yeah, it did, but guess what? The volume is way too high on the rejection. And this is only, let me just put this on a weekly for a second. Yeah, because on the weekly, you're going to see 97 million, yeah, and you already done 30. So on the whole week, it's gonna really slam it on the weekly, because on the weekly, what you have is that we've done 97 million there. That was the week of the 18th, 17th, 18th, 19th, and you've already done 30 million. Apple, of course, that, you know, Apple was the weakest one up at this high too. You know, Apple, since May 8th, it was just, you know, going sideways up here with 19, 20 million shares, and then all of a sudden when that thing let go at 64 million. You've done 63 million today, and what's screaming on Apple is 130. 130 is the February 1st day, and I believe that's right after they come out with numbers too. The prior day it closed at 120, next day it went up to 130. But that thing looks like it's game in a big way. If we go over and we take a look at the oil market out here, so let's see. So crude, we're trading at $46.35 a barrel. This has had a hard time holding price, and it looks like that it's now set up to not only go south, but it very well could be a good-sized ABC structure on the way down. You know, I mean, we come down hard from $52.22 a barrel. Last week we hit a low of 45, 48. You're going into a high-volume swing where it saved itself on the 5th. But the way oil's traded today, you got up to 46.94, rejected price. You're closing at 46.35, and anything under 46.41 is really saying, hey, is this the C point of a ABC structure on the way down? And that would be pretty intense if it is, because that would be saying that you're not only going lower, but that's going to be going down into the 43, 42 levels. We take a look at the X, and we're just talking about the banks. So we go over to the XLF. XLF out here, this has been going into ICE and the downdraft from the 21st of March. That's when the XLF went from $24.38 down to $23.51. You did volume of 192 million. We're doing volume of 78 million coming into that baby. Bottom line, you get the Federal Reserve meeting with short-term rates more than likely going up 25 basis points. That's going to be happening this week. A lot of action inside the banking structure. You stay right there, folks. We'll be coming right back. Dow Industrials are down 57. NASDAQ is down 45. S&Ps are off 4.5. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2019, 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 63. You get the NASDAQ off 50. S&Ps are off 6. And we'll see how we end up coming into the close here. If we look at the S&P first, you have, we've been kind of in the same range for quite a while right now, but what I expect you're going to see here, you know, you can argue the S&P's been a flat market. You've been down anywhere from 8, 8.5 this morning. Let's see, actually 4, 8. No, you were actually down, you were almost down 12 this morning right at the open. And then we were only down like 3.5 about 20 minutes ago. I expect we're going to be down somewhere into the 24.18 level, and we're 24.22 right now. So we'll see how that shakes out. And the NDX 100, that's where the real volatility has been out here in spades. We are at the 56.92 level, 95 level rather, and I suspect that's going to more than likely get down somewhere into the 56.90. We'll see whether it cracks that and gets into the 56.78. What is interesting is that, of course, on the way up, you know, the heavy weight inside the NDX 100, no doubt, you know, helps it on the way up, helps the Qs on the way up, all the above. On the way down, guess what? It takes it to the cleaners in a huge way. And this article here, so check this article. This is pretty cool because they got a chart in it too. This just come across the Bloomberg. So when it comes to ongoing technology beatdowns, it appears not all shares are created equal, and we know that. We talk about that a lot, actually. 5 names accounted for 75% of the drop in the NASDAQ composite, folks, okay, last week. Is that intense or what? That's pretty intense. So what do you have? This is what you have. You have Microsoft, you had Google, you had Facebook, Amazon, and that did it. That did it, and it did it in spades. So it's a big number. And you know, when you take a look at those equities themselves, it's not like those equities, to me, want to get into higher price. You know, all of them. You get, if we look at Apple right now, Apple. The low of the day is 142. You're at 144.04, and you're going south. We take a look at Google. Google's trading 957. Now, with Google, you talk about a spread. Google's saved itself tremendously, meaning in price, because that did go down to 936 on the open. Now, that's a high volume swing low, so I expect it's going to get tested once again. Amazon's been trading flat today. Well, when I say trading flat, flat as to the correlation inside of how it traded last Friday, because the Amazon went from a price point of 1,012 to 927. Right now, you're down $17. You're at 960. It has volume. Bottom line is that, Microsoft. Let's look at Microsoft. So Microsoft. Yeah, Microsoft's in trouble too. So, well, actually, Microsoft. Yeah, just about hit. So the low of the 18th is 67.14. Microsoft came into 68.13 today. And what this did is, just as the rest of them, this came down way too much volume. So we're going to be back down at those levels again. Pretty amazing watching this whole thing shake out. The Fed meeting, what we have is, let's see. So today's the 12th. We're going to get it's the 14th at 2 o'clock. And right now the Fed fund futures rate is saying that it's 97.8%, that there's going to be a short-term rate hike. And that short-term rate hike is bank to bank. None of us are going to get that rate hike. No, not the rate hike. I mean, none of us, we never get that deal. You have to be a bank to get that deal. If we do take a look at the 10-year yield right now, the 10-year yield is at 2.2. And the low for the last 6 months is 2.14. The high is 2.6. So bottom line is that you're still at very low rates. We take the 30-year up there. The 30-year is riding at 2.86. And if we boom this back again, and even at 2.2, you can see that our rate is still very high compared to first world rates. You know, you have the UK is at 0.9% on the 10-year. France is at 0.5, almost 0.6. Germany is at 0.2. Italy is at 2%. Bottom line, this whole rate structure battle is going to be really intriguing, particularly when the Fed comes out on the 14th saying, the expectation flat out is that, the short-term rate's going to go up. And we'll see what they do at the 10-year and with the 30-year. And we'll see what they also, what that does with the U.S. dollar. Thus far, the dollar just cannot catch a bid. And if we take the dollar and we put this on a continuous contract, what you're going to see that's laying out here. So we put this on a continuous contract. It's gunning for the 95.905. And that number, folks, that was the low of the night of the election before the dollar took off. The dollar traded there for all of about 3 or 4 seconds at the low, took off like a rocket ship, ended up going up to 99 the week of the 11th. Then went all the way up to 103, failed on price, got back inside the range. Now, bottom line, it's building cause to get all the way down to the 91. So it's going to be intriguing, watching, because this consolidation here also has been going on since March of 2015. So that is one long consolidation. If we go over and take a look at the GDX, inside the GDX is the Market Vectors Gold Miners Trust. This is backing down, has light volume. We're going to need a bid, though. That's the bottom line. What you have out here, showing you don't have sellers, but we're going to have to show that we have buyers once again. What we did do is you got a nice sign of strength last week. The sign of strength came in on the 6th. You went topside at 97 million. You backed down last week on Friday. It was 50 million. Today you did 30. Bottom line, though, now you got to see a sign of strength come back in that baby. And Silver needs to catch the bid. Silver always seems to have to catch the bid too. That's kind of Silver's MO out here. So as we get into this percentage-wise, this is what you have out here thus far. The Dow is down 0.3, Nasdaq is down 0.7, S&P is down 0.2. So the market in general, the Nasdaq, of course, is the one that took the big hit. And we'll see whether the Nasdaq can drag the rest of the indices down. There's no two ways about it that the Nasdaq was the leader on the way up, bottom line, and we'll see if, in fact, that's going to happen. I can tell you this, that the way that those highs came in on Friday, it's really hard to do that every indice hits a high at the same time, meaning in the same day. And that's what we had. And then all of a sudden, the NASDAQ let loose and goes downtown. That has the makings of a real top. You stay right there, folks. We'll be coming right back. Dow Industrials down 59. NASDAQ is down 43. S&Ps are off 4.5. We're going to bring it back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 48. NASDAQ's off 39. S&Ps are off 3.5. And we go take a look at where we stand here with the volume. You got 689 million on the NYSE. On the composite, we are at 2.3 billion. The Qs, yeah, it's pretty amazing. The Qs have done 97 million thus far. So you get Friday, the Qs did 109 million. Today we've done 97 million. That is going into your swing areas from the 17th and 18th, where there are also high volume swing lows out there. 136.05. You've done 55 million. You're barreling into those with bigger volume. So your probability is that number one, you're going to get down there and retest those areas. Number two, we'll see whether they can bust those areas out. We go take a look at Walmart, because it's no doubt it's Walmart versus Amazon. Walmart, look at this. This is pretty wild. I think Walmart almost hit a new high today. So the high on Walmart's $80.47, I believe. Oh, yeah, no, it's not. Okay, not a new high, because Walmart's high is all the way up at 90. That was January of 2015. But lately, so bottom line is that in a market that is some volatility, Walmart tried to get to another high today, couldn't handle it. It was trading into the last swing high it had on the 5th of June, and we did 8.5. We've done 8.5 million versus 10 million coming into that area. Let's go take a look at the SLV. So the SLV, folks, is the iShares Silver Trust. Silver needs to basically get a sign of strength going. Now, silver, this is coming into this 1589 area. We did 16. This it's coming in with lighter volume, but just as the gold contract needs a bid, silver contract needs a bid. Now, if you take a look at the actual silver contract, you're going to see it is monster volume, and what that is also is that we're rolling contracts right now. That's what's happening there. And when that happens, what you do want to do is go into those ETF structures, look at those ETF structures, see what the correlation is, and see if, in fact, it's heavier volume or lighter volume. That's one way you can do it. Another way you can do it is always keep track of the contracts when you get closer to the roll, because then you'll take a look at the contract you're trading versus the trade you're rolling into, and that'll give you basically a decent understanding of what's going on also. If we do take a look at these cues, so you get the NASDAQ's trying to breathe. All of this is, really done is that, let's see, so we've just had a nice little bounce in the NASDAQ. We went from down 90 cents to down only 74 cents. The high of the day thus far, we're at, no, we're not. Actually, that came at 11:20 this morning. That was 139.48. Right now, you're at 139.22. What we have here, and I'm sure, depending on how long you've been in the marketplace, we haven't seen this type of volatility in a long time. And when you get this type of volatility, you can go down 10, 20, 30 NASDAQ points in a heartbeat. This morning on the open, we went down 50 NASDAQ points in a heartbeat. And then it can give back 20 or 30 at the same time. You can expect that we're going to see more of that movement in the next few days, because what we also have going is that you get the Fed meeting happening. You have these stocks that already broke, and of course, what the bulls are going to be looking for, they've got rewarded every time they bought it. The real question is going to be, do they get rewarded this time too, or are they buying into it, and all of a sudden, boom, it opens up in the morning, takes another dive down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming back with some numbers after the close. Dow Industrials right now down 39. NASDAQ's off 34. S&P's are down 1.5. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Cultivate wisdom. You don't have to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market boys, let's take a look at it out here. We have the Dow Industrials down 36, Nasdaq off 32, S&P's off 1.5, gold contract down $3.80, trading at $12.6760 an ounce. Silver down 28 cents, $16.94 an ounce. Platinum up $4.20 at $9.44 an ounce. Copper down 3.5 pennies at $2.61 a pound. Light sweet crude up 22 cents, $46.05 a barrel. Notes, 10-year note down 3 ticks, 126.17. 30-year bond down 5 ticks, 155.12. Both notes and bonds, bottom line, rejected lower price once again, had lighter volume. They want higher price, lower yield. We get the Federal Reserve statement that's going to be coming out on the 14th. So that's going to be Wednesday at 2 o'clock. The market expectation is that they are going to raise short-term rates. That's a bank-to-bank rate, 25 basis points or 1/4%. King dollar up. King dollar down 84 ticks, 97.155. King dollar continues to have a hard time, folks, getting up into and over the 97.275 level. And that level in itself is like so anemic, and so it should be so easy to get over, but King dollar just can't catch a bid. The euro is trading at 112 to the U.S. dollar. The yen is at 109.90 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get a sideways market out here today. The SPY only closed down 6 cents. Bottom line, I do expect what you're going to see is that before we get to a higher high, that is that you're going to see this low get tested from Friday. We get downtown Friday, $241.97. That wants to get tested. The Dow Industrials, same type of setup in the Dow. And the Dow Industrials out here, sideways move. You're down $36, big deal. You're at 21,235. What I do expect is you'll see the 21,159 get tested. Now, the composite and the NDX 100, those babies got some trouble in paradise happening. So the composite out here today, you talk about another expansion in volume, was pretty wild. The composite did 3.1 billion shares on Friday. Today we did 2.5 billion shares. You get down to 61.10. You closed at 61.75, so nice move there. No two ways about that. That being said, guess what? We'll put the Qs up. What you're going to see out here, the Qs did 101 million shares. You did 109 on Friday. You're going into your swing points out here from May 17th and 18th, which were high volume lows that wanted to get tested. This low today inside the NDX 100, I expect it's going to get tested again. This thing is building cause now to blow away the swing point from May 18th, which is 135.87, and more than likely it's going to go right after that gap, because you don't get a lot of monster gaps inside the Qs, but we do have a monster one from the 21st of April. So that first number there is 132.78. Gold contract. What do we have with the gold contract? Gold contract and silver contract, they both need a bid. What we got out here today is that you got to a low of 1265. We're 1267. Now, the cool thing is that at least it got over 1266.70 again. The volume was lighter, and that's what we needed. You're coming into the strength from the June 2nd. The low of that day was 1261.30. I'd like to see this baby get some strength tomorrow, and it's real possible that we will, because I'm gonna go over to the yen first before we go into the bonds. So the correlation between gold and the yen. What the yen did out here, folks, is this. So the yen has been strong all day long. That correlation hadn't got into the gold contract, so we'll see how this shakes out tonight in Japan. If we go take a look at the Nikkei, and so the stronger that the yen gets, the more problems the Nikkei has getting to a higher price. And what we did do last night, which is there Monday morning, the Nikkei traded down $104. Right now you're at 19,908. Now that's still in the higher range. 19,920. No, 19,668. So, approximately 230 points lower, we'll get that in the lower range. What we did do is that volume wasn't that big. It was an expansion. Excuse me, it was an expansion of volume, but it would need much higher volume in order to stay at the lower price. Bonds. We go over to the bond market. We look at the 10-year yield first. What you have on the 10-year right now, it's trading 2.2 on the 10-year. What we did out here today is that you rejected lower price at the 126.06. You had 1 million contracts. That's light contract volume inside the bond market. We were coming into 1.5 million contracts. The low of that strength from the June 2nd area is 126.04. We got to 126.06 today. Had 1 million contracts versus 1.5. That's saying higher prices are coming at us. 30-year did the exact same type of setup. 30-year out here got down to 153.25 today. Let's just say this. We did volume of 226,000, which was going into 323,000. And good old King Dollar that just can't catch a bid. King Dollar out here caught a bid last Thursday off the bottom. Guess what? Just couldn't handle it. So what you have here is, King Dollar, when we take a look back, 6 months ago, it's trading at 103.75. Bottom line, King Dollar is building cause to get down to the 95. And we'll see if it can hold that 95. But it actually looks like is that next couple of months we have 91 coming up on it. And a lot of that's going to have to do with the Federal Reserve and how many more times they're going to raise short-term interest rates. This is Tom O'Brien. This is TFNN. We had the Dow Industrials finished down 36, NASDAQ off 32, S&P's down 2. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over and take a look at the GE. So, bottom line out here at the this morning, GE came out with the announcement that Jeff Elmont is going to retire, and bottom line, they're going to get a new CEO. Didn't do much for the stock. The stock gapped up. You know, stock had closed on Friday at $27.94. You're at $28.94. We take this and we put this back, and what you're going to see, I'm going to put this back like 20 years. So it's pretty amazing. You know, GE topped out, is that 2000? Yes, it never came back. So GE in 2000 was $60. Bottom line, does the first downdraft, goes from $60, 2002 gets down to 21. Does a counter trend bounce up to $42 in 2007, and then crashes like the rest of the market? That goes down to $5.72. That being said, bottom line is that you get a consolidation up here, and it's still having a tough time getting through the downdraft out here from 2008. So the number that you want to really keep your eye on is, right where we are. It's 29.28. Your first number was in fact, let me do it this way. I'm going to put this on 20 years. This will be pretty cool. So you can see it clearer, actually. Oh, yeah, this is GE's not going anywhere. So check this out. So GE, September got to $33. You had, you're looking at a quarterly chart here if you're doing this. So that's 3 months of trading, gets to the high, $33, does 2 billion shares. Well, you're coming into 4.5 billion. The supply line for GE is incredible because you can take the supply line, and what this is saying is that anyone that bought GE from 1998 all the way over to 2008 is in a losing position. That, folks, okay, is a huge problem for GE. And, what you did have there is that GE ended up being in the finance business. They used their balance sheet to basically leverage up, and guess what? Didn't work. That's the bottom line. It's going to take years. Looks like it's going to take more years than Jeff Elmert had. Anyway, bottom line, he was there, I believe, 19 years, maybe 14 years. Long time. Some of the higher volume stocks, well, actually, let's go over to NVIDIA, NVDA. So NVIDIA was one of the darlings on the way up. NVIDIA today was flat. On Friday, NVIDIA was one of the equities that started the downdraft. 168. It went from 168 down to, yeah, it hit a high of 168 at 9:40 in the morning, and then all of a sudden it was already about 11 o'clock that it really started going down, and there was fast and furious, and each and every equity started right with it. If you take a look at Apple, you're going to see Apple didn't really start falling apart to about 12. 11, it was down 1 point, and then at 12, see you later. It just went, and what you had with Apple, of course, is that Apple can take just about everything with it, because that's where the deal being that the weighting structure is so big inside the QQQs. You sell an Apple, they have to sell the QQQs. You sell the QQQs, they have to sell Apple. It goes back and forth on a continual basis. Let's get over and we take a look at the gold market, the XAU, the HUI. So XAU today, down 95 cents. You're trading at 83.42. And yeah, we need this baby. This baby's going to have to catch a bid pretty soon, because what you have is this. So we had a nice sign of strength last week. It was up in 55 million. We backed down, and we backed down with 38 million. I'll get these volumes tonight, but this will be even less. Now, that being said, guess what? You have to get back inside 84.22, because that's where the strength is. You know, now on the daily, on the weekly, the setup is still there, but has to catch a bid. Gold Bugs Index, same setup. Gold Bugs Index, that was down $1.30 today. You are trading at 195 even. This had gone topside with 42 million. You back down with 27. Listen, it's going to be intriguing watching this, particularly, folks, because what we do have is that the statement on the Federal Reserve on Friday is going to be just as important. Well, it's definitely going to be important, because the market is expecting that we're going to go up 25 basis points. The real kicker is going to be, are they going to go up 2 more times in 2017? Are they going to talk about how they're going to bring down their balance sheet? All of the above. So this is what we have after this meeting. You have a meeting July 26th, September 20th, November 1st, and December 13th. At the beginning of the year, the Federal Reserve said they wanted to raise rates 3 times in 2017. It looks like it would be pretty easy to do, because if they raise the rate this coming Wednesday, and in fact, if you're watching Tiger TV, it's 100% today. So if they raise the rate Wednesday, they leave it alone, let's say, in July, and then guess what? There's no meeting in August. September is game. And, you know, we got plenty of time. You get September, you get November, and you get December. So we'll see how that shakes out. And, of course, that's going to affect all the commodity markets. It will affect the dollar. Thus far, it hasn't. But bottom line, if the market thinks they're going to go up quickly, it will affect the metals and will affect the dollar very quickly, meaning it will catch a bid under the dollar, and the metals could get hurt very quickly. That's not my take, but you got to stay cognizant of that. Inside the commodity market out here today, you had corn was down 2.7%, wheat was off 2.5%, hogs were down 2.5%, cattle was off 1.8%. Those are big hits, man. Let me look at this wheat market for a second. Yeah, evidently they didn't get a bad weather. It was supposed to be all hot weather out in the Midwest, but the way these are trading right here, this came, let's see, so this was down 11 cents. So you have $4.48 a bushel right now. The volume's light, though. This is setting up kind of nice for a buy, actually. We only did the volume out here. So we were going into 72,000 contracts. We only did 48,000. You had natural gas was down 1.2%. The mover out here today inside the commodities was cocoa. Cocoa was up 2.4%. You're trading $2,000 a ton. And we did 37,000 contracts. Yes, that's good contract value. So this looks like it wants to take out the 2,097 a ton and get up to 2,188 a ton. Our phone number is 877-927-6648. We had the Dow finish down 36, NASDAQ off 32, S&P's off 1.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if we go over, we take a look at the Canadian dollar, what you're going to see out here today, this was quite a move. So the Canadian dollar, folks, as this gets down, it gets stronger against the U.S. dollar. The Canadian dollar was trading at 137 Canadian dollar to 1 U.S. dollar on the 5th of May. Today we're at 133. And it looks like we got a small ABC down here. So you got 137. Yeah, you get four pennies, which just get you 131. And what this is all about, and this is what's going to get intriguing on the U.S. dollar, too, is that, of course, the Canadian dollar is in the basket. It's not a huge part of it, but it's in the basket. But as these, you have two different things happening for this dollar index going down. One way it can happen is that the dollar just gets weaker and it's sold, which has been happening. And then, of course, what happens is something like the Canadian dollar like this. That gets stronger against the U.S. dollar, flat out. And what that was all about today was the Bank of England offered its strongest signal yet that it's ready to raise interest rates as the economy gathers steam. And this was a surprise. Bottom line is that sent the Canadian dollar higher and their bond yields were soaring. So here's a quote. As growth continues and ideally broadens further, Governing Council will be assessing whether all of the considerable monetary policy stimulus presently in place is still required. This is from the Senior Deputy Governor, Carolyn Wilkins. She said this today in Winnipeg, Manitoba. At present, there is significant monetary policy stimulus still in the system. Wilkins said policymakers will be focusing on the data and talking to many people ahead of the next interest rate decision, which is on July 12th. The remarks are an indication policymakers anticipate the next rate move will be higher as momentum has shifted after 2 years of pain from the slump in the oil prices. It's also effectively a rebuke of pessimist betting on a disorderly unwinding of Toronto's housing bubble that has left the Canadian dollar one of the worst performing currencies this year. Bottom line is that the rate structures all over the world, it's going to get intriguing watching this whole thing shake out. The way the market is still trading it, folks, is in our markets. This is that regardless of what the Fed does on a short-term basis, meaning bank-to-bank rate, people are still buying these bonds, and so right now there's more demand for the bonds than there are supplies. And of course, if that continues, which it looks like it is continuing, that'll keep the short-term rates low. And what you have is this: you got to remember something, that we're awash in liquidity. These funds, meaning pension funds, states, schools, trust funds, all of the above, inside their charters that run them, they have black and white allocations, meaning that, yes, they can put so much money in real estate, they can put so much money in hedge funds, they can put so much money in the market, and then inside the market, they can put so much money in equities, and guess what? Almost every one of those have benchmarks inside them saying, and so much money in treasuries and in bonds. The reason being that's the whole deal about diversification. And when they talk diversification, also though, they're not talking diversification over the course of even a year. They're talking about diversification over the course of years, and that's why that whole deal is so many bonds, so many stocks, so much real estate, so much oil. You can go sector by sector. The amazing part about it, of course, is that this bond market has been on a tear for so long. So if we even go over the 20-year plus iShares, the TLT, what you're going to see here is that we're at 124.36. Now this is going to be interesting for the bond market tomorrow, because this is what you have. We took out the highs on June 2nd. So we did 13.2 million. You back down Friday with 5.1 million. Now what we did today isn't cool. So this is going to get interesting coming up to the Fed meeting here. Look at the TLT, because the TLT very well, we got up to 124.99 today. It rejected that price, has tremendously lighter volume. So it's like the low of Friday is going to get tested. And this could be a small ABC structure on the way down. So tomorrow, going to be a number, no doubt, inside this bond market. So we'll see. If we go over to the VIX, we take a look at what type of insurance policies are out there. The VIX right now closed up 76 cents. You're $11.46. Now, that had a high out here today of 1237. We talk about price spread on Friday, but this is what happens to the VIX. The VIX went from 937 to 1211. And those products, that's why, I really don't care for those VIX products on the ETF structure. The reason being, folks, is that they move, but what happens is that they don't move until the market actually moves. So the VIX always goes up when the market is going down. And it just depends on how fast the market's going down about how fast the VIX actually goes up. Now what is intriguing out here, there was an article out here earlier that I was reading, and what it was about is, if we take a look at here, watch this. This is pretty wild, because what the article is about is that the hedge fund community, there's a lot of short positions inside the hedge fund community. Well, let's put it this way. There's hedge funds that are short-long hedge funds, specifically. That's what they are, short-long hedge funds, right? And what has happened, not to all of them, but to enough of them, is on this downdraft here, they didn't get what they were looking for. The reason being is that the only indice that croaked was the NDX 100 and the NASDAQ and the composite. Bottom line, normally, could you imagine that, okay, you're long the NDX 100. They've been making a lot of money on that, right? You're long the NDX 100, going up, up, up. You're trying to say, okay, if there's going to be a hit, I think I'm going to be long the NASDAQ, the NDX 100. I'm going to be short the S&P, okay? Bottom line, you can see what happened on that trade. That trade did not cooperate, because what happened is that you lost money, the fund would have lost money, hedge fund that would be doing that strategy would have lost money big time on the NDX 100 and not made money on the S&P, because the S&P hasn't cracked. So a lot of different ways that they put these trades on, and they're never easy. Now, if you had just the opposite of that trade, that would be a whole different animal. And I'm sure, there's a lot of funds out there. I'm sure someone had the opposite of that too. You stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. Dow finished down 32. NASDAQ was off. Dow was down 36. NASDAQ was down 32. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. And if you want to see how Amazon, folks, is kind of wrecking things for other retailers around the world. So if you happen to be watching Tiger TV, you're going to see I have Auto Trader Group up. Auto Trader Group operates digital automotive marketplaces, buy and sell cars, vehicles in the UK. Well, this little baby here today, so this is traded in pence. What you're going to see is that, 2 weeks ago it was at 445 pence. Today it's at 405 pence. Bottom line goes south today, and what that's all about is, let's see. So Europe's online car market, so check this out. Look, Europe's online car market is about to get more crowded with a plan by Amazon.com to sell vehicles in the UK, unnerving shareholders of the region's biggest auto websites. Britain's Auto Trader Group PLC fell to a 2-month low following a report that Amazon plans to expand its car offerings in Europe beyond the current test run in Italy. The retailing giant, which already sells vehicles in its home market, is seeking to fill a gap as traditional dealerships lose appeal. Tech companies from Apple to Alphabet are upending established industry structures as almost every aspect of making, driving, and buying car changes. There's no doubt about that. I mean, talk about self-driving cars. Seattle-based Amazon, which has been testing European waters with a limited offer of Fiat Chrysler automobiles in Italy, is now in talks to start sales in the UK before potentially adding countries, more countries. Germany, a German trade magazine, Automobile reported. Manufacturers typically sell autos to affiliated dealers. They responded to changing habits by allowing customers to finger cars online. BMW is testing online-only sales in some markets. Mercedes, Land Rover have opened urban brand stores complete with restaurants and juice bars. While Auto Trader's market position in the UK is very, very strong, anytime newcomers come in, such as Google or Amazon, it's enough to unsettle investors, said a London-based analyst. The bottom line is, it's going to be really wild here, folks, is to watch that, what has happened with the internet has taken the middle out of a lot of businesses. The real key here inside that auto business and the food business is that, the automakers actually let Amazon take the middle out of it. Because if they do, it's going to be pretty intense. And what that would mean is that, let's say you're Amazon, can you make a direct deal with a Mercedes, with a BMW, with a GM? And if that comes down the pike, I think it's going to be like, it'd be a whole different distribution model. There's no two ways about that. And I guess the actual manufacturers would just have to figure out, can we make more money doing that and not have our dealers go out of business? It would seem that if they did that, the dealers would go out of business. Inside the grocery business, it's all going to be about Procter & Gamble. So let's go over and look at Procter & Gamble for a second, because this is what Amazon is trying to pull off with Procter & Gamble. Right now, if we take a look at Procter & Gamble stock, Procter & Gamble is trading just about at its highs. Yeah, so we're at $88.24. The high in Procter & Gamble is 93. Let's see what they pay for a dividend. So they're paying 3.1%. They take in $65 billion a year. That's at the B. And they own lock, stock, and barrel the healthcare business. The beauty, the healthcare, all of the above. Now, what Amazon is trying to have them pull off is this. When we go to the stores, right? Publix, Stop and Shop, all of that, right? All those items are packaged for those stores. They're packaged so that we go up to them, we look at them, yeah, we want this package, we want this, it looks good, whatever that is, whatever their, research has shown how we're going to buy. What Amazon wants done, and I suspect it's going to happen too, inside the food business, is that Amazon wants new packaging so that when you and I, whatever we buy item X. That item X is going to be packaged so that it's perfect for whether it's a UPS, whether it's a FedEx, whether it's a post office. It's going to be perfect in order to basically package it in a box, number one, or you go from the box goes to the truck goes to the plane goes back to the truck goes into our mailbox or in front of the house. Bottom line is that you can imagine the difference in the packaging of all these, and then you are going to see some large supermarkets going out of business, because if they get that down, which I expect they're going to get that down, that's going to cut a whole nother row out of it. And the difference, I think, I don't see that happening in the car business, because you have to bring cars back, you need service and all that. You don't need service inside the food business. We're buying groceries, you don't need service inside of that. What you need is that you need the food, right? And I remember when the Costco's of the world came around. You remember you never had big boxes like that, and so all of a sudden what ended up happening when the Costco's came around is that the Procter & Gamble, they got bigger packages, bigger everything, so that you think you're getting a deal, but all of a sudden you're buying 5 or 6 of the same package. But I suspect they're going to do it, and it looks the way that that Procter & Gamble is actually, it's not a bad looking chart. I wouldn't be buying it right here because it's a consolidation. But the way that this chart is really looking, it's almost like, could be a new business plan, and they can go up and over pretty quickly, those highs. Because watch what also happens. Now, this is the Procter & Gamble. I guess if we broke down their balance sheet, we'll be able to see on their numbers as to what they have to actually pay for space. But there's a huge deal about paying for space inside supermarkets. It's advertising. It's paying for space. Getting space, getting distribution, the whole thing. Could you imagine Procter & Gamble basically starts pushing that out there? Then they start squeezing the stores, saying, I'm not going to pay for your space anymore. That's a huge amount of savings. I mean, in a big way, too. So Amazon's not going to stop. The amazing part about Amazon, of course, is that once they go into one industry, they get that going. They go into the next industry, they get that going. They just don't stop. I mean, when you think about they started out as booksellers, and I suspect from booksellers to everything and anything that they can see, I would say their business plan is that they are just a delivery service. That's what that really comes down to. They're probably the most efficient delivery service the world has ever seen, just as of right now. You stay right there, folks. We'll be coming right back. The Dow finished down 36. NASDAQ off 32. S&P's off 2. Volume out here, you had high volume in the NDX 100, high volume in the NASDAQ. Volume in the NYSE was not high. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, let's go to our man Carlos in California. Hey, Carlos, what's going on?
Hey, Tom, how are you?
I'm doing great, man. Yourself?
I'm doing okay, Tom. Thank you.
Cool.
Tom, I had the opportunity to join the den over the weekend, and I just want to thank Mr. C and Mike. They were very nice to drive me through a little bit in the den.
Oh, cool, man.
Yeah, they were very gentle people, and I really appreciate that.
That's a beautiful thing. All these tigers and tigresses growling and prowling together. I know, man.
Yeah, I was only watching today. It was a little fast for me to keep attention on my positions and looking at the other screen with the tiger den. So I hope I get used to it. And
so that's important to keep your head wrapped around that, because this is what ends up happening, folks. The den is great, okay? There's a lot of great ideas and great trading in it, but what you don't want to do is get so wrapped up into it that you're not watching your trades or looking at your trades, and then what ends up happening is that it's like, oh, someone's saying one thing, this is another, because it's all bullish and bearish, folks, you know? So, and so...
But he was very good.
For sure. Listen, there's great ideas, and just stay cognizant of it. I agree. But that's you know.
Tom, the reason I call is I'm holding some futures on platinum.
Okay.
And I end up closing my silver and gold today.
Okay.
The reason I had to stop I had a stop where I have to get out on those positions.
No, totally, yeah.
And my concern is, as you know, the yen and and the dollar, they kind of behave different than they
Today.
normally
Yeah, they
do.
did.
Actually,
Right.
they start doing it on Friday.
Okay.
I noticed on Friday was kind of like this type of behavior, but today was completely obvious.
And what Carlos is saying, folks, that the yen was getting stronger, and the gold contract was not getting stronger, and it's normally a direct correlation and quick too. Yeah. And with the divergence out here today too is like, on Friday, like platinum was up, and it's like, okay, why are you up, platinum? It's been weak. You know what I'm saying? So I know, right?
Yes, and that's my question. Because I have a small loss on this position of platinum.
Yep.
I've been touching some gains, and since I was thinking that possibly it was a divergence between the platinum and the other metals that may go higher. But the taste of not taking them gives me a little frustration. Can you give me an idea if I'm doing the right thing, holding this a little bit, or should I?
What I would do is put a stop under I guess the lows that. Let's see. Here's a high volume, 942.10. I wouldn't give it much because we know how this can go, man. If this goes south, it's going to go south big. Yeah. And that divergence is important. What you definitely want to keep your if the Nikkei is trading down tonight, then our probability gets higher, Carlos, that the metals will go higher tomorrow. The Nikkei is going to be important to watch tonight, though, because we know we have the disconnect between the yen, the dollar, and gold, and it's like, okay, if the Nikkei goes down, then we'll see where this shakes out tomorrow.
Tom, is this market too small? The metals market too small that can be drive one way or the other?
The platinum one definitely is. Yeah, platinum.
But I see the gold in this case.
Yeah, they can. Okay, here, let me qualify that. Yeah, the gold market's tiny too. It's bigger. It is tiny. Yeah, a Goldman's desk or Morgan Stanley's desk or Citi, they can take it wherever they want it most times.
All right, Tom. Well, take care.
Okay, have a great one, Carlos. Have a safe one. Always remember, folks, whatever you think about, you bring about. Have a great night, safe night. Look forward to speaking to you tomorrow. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.